friends, Kim Kreitzer for CBSI and CBSI Talking Business, another episode of our podcast, talking with leaders in the field of digital marketing, banking, insurance, customer service, and business education, all to highlight our great team here at CBSI. We're based in Harrison, New York. We provide insurance-based benefits to the credit card and payments industry, and we are celebrating our 50th year since our founder, Bob Conti, started the company in 1972. And we are really glad today to have a chance to talk with our friend Wayne Miller, who is the executive director of the Venture Center in Little Rock, Arkansas, and does a lot of work with the Independent Community Bankers of America. Wayne, good to see you today. How are you?
Hey, Ken, I'm great. And thanks for having me back on. I guess I didn't disappoint the last time. I'll try not to do it this time. So good to see you.
Oh, it's always good to talk with you. And, you know, I was saying we did a talk with Bob Fisher, the CEO of Tioga State Bank, upstate New York, who is the immediate past president of the Independent Community Bankers of America. And I'm so glad that he recommended that we speak to you and learn all about your program, that the ThinkTECH Accelerator that the ICBA sponsors. Tell us a little bit about the overall program.
Well, thanks. First of all, big fan of Bob's. He's been a great supporter of this program and part of our selection committee since we began this program. We just completed our 4th year. This past Wednesday, of course, was demo day. And we also had the opportunity to present at the ICBA Live Conference in San Antonio this past month as well, or I guess last month now, to about 1,800 community bankers. To give you a little bit of the history, you know, we've been at this for about 7 years with FIS, and we've learned an awful lot in that process. About 4 years ago, I had an opportunity to meet Kevin Tweddle and Tina DeGiorgio, who came from the ICBA, who were sort of combing the country to improve the innovation efforts of the ICBA at that point and to try to help community banks really remain relevant and also certainly competitive. You know, you think about 4 years ago, the word fintech probably doesn't have the same warm, cuddly feeling that it does today. Certainly, many of the fintechs, if we go back 4 or 5 years ago, were thinking a lot about how to disintermediate banks or how to take their customers away, those sorts of things. And our approach here, since we've been working with FIS for 7 years, has always been to find solutions that were enabling to banks and certainly not disintermediating. You know, our approach is always disruption is good, but disintermediation is bad as it relates to banks. Kevin and Tina spent some time with us. They had a chance to go through our FIS program, learn about the methodologies that we use here, which are quite a bit different than what you'll find in sort of typical accelerator, incubator types of environments. And it's something I find I'm often challenged with to help people kind of break that stereotype of what they think we do here. So we were fortunate that Kevin and I were able to come to an agreement to start this program. And of course, the other challenge is people say, you know, geez, why Little Rock? And I know you and I have talked about our history here before, but you know, you wind the clock back to 1968, and actually in the building that I'm sitting in, a guy by the name of Jack Stevens handed a guy by the name of Walter Smiley a check for $400,000, and that started Systematics, which today, of course, is FIS. So, you know, we always say it's our story. We're sticking to it. We sort of call Little Rock the place where fintech began. So we started off on the ICBA program, like I said, 4 years ago, and our intention was first to identify very clearly what were the challenges that community bankers think that they were facing. What was the big issue? What was keeping them up at night? And so instead of, you know, I think this is what you see with a lot of other incubators and accelerators, is they tend to hold up a lot of shiny objects in front of potential stakeholders or purchasers of these products or services. And also the stage of the company that we work with has changed quite dramatically as well. And so what we did is we worked with Kevin and the team at the ICBA to assemble a selection committee. This was a group of at that point, about 10 or 12 community bankers. Of course, Bob was one of them, and there were a number of other great community bankers who remain involved today as our selection committee has grown to 30. And we identified those sort of 10 issues that were sort of keeping them up at night. They were things like cyber, workflow, automation, non-interest income, having to acquire deposits. Back then was a bigger deal, of course, than it is today, post-pandemic and what have you. And it was from that we were able to then take that sort of shopping list, if you will, and be able to go to our global network of companies that we look for, work with, and will apply to our programs to determine who are the best and the most relevant. And through about a 100-day process, once we've identified companies that align with those particular concerns or problems, we then work with the selection committee. And at that time, there were some of them who were not so much naysayers, but they were like, well, what's the ICBA really going to get out of this? What's the value that it's going to bring in? And I don't know much about this. The other thing is, community bankers are just a different breed. They are just a highly passionate and committed people to their communities, the demographics and the geographic areas that they serve. Many of them are doing quite well, third and fourth generation bankers, et cetera. But one of the things we really learned is that they just simply didn't have the type of access that they wanted to technology. So the question is, where do they begin to look for that? So this program became a platform for that to occur. So like us, they learned about how to evaluate these companies effectively for application to community banks. And if we go back in those 4 years, we look at the companies that we were dealing with, they were a little early stage. Many of them were in market, but many of them were not. Some of them were really more at sort of an MVP stage of trying to take a concept or an idea and bring it to bear. And while the community bankers were graceful, helpful, and directive and gave them good mentorship and guidance, at the end of the day, at the end of the program, it really wasn't hugely valuable to the banks. It was to the companies, because they weren't able to really deploy these solutions, immediately. And while, we look at our industry, as highly regulated, lots of compliance, all the challenges that new companies having come into this world, this thing we call financial services, and getting through things like vendor due diligence and so forth, pretty hard, long lift. But we did know that community bankers, most of them in that sort of sub $10 billion range, are more inclined to want to buy a solution as opposed to build a solution. The other thing we learned is that for the most part, many of them depended on their core providers to be that innovation arm, if you will, for the bank. And while the core providers are very strong and very good at innovation, getting that level of granularity with as much as they have on their roadmap was fairly difficult. So after about a year of the program, we recognized that what we really wanted to do was work with companies that we call bank ready or shovel ready, if you will. Companies that these bankers can help guide and mentor, but more importantly, a little bit more mature. So in market, likely already have customers, have been through the regulatory and of course the compliance due diligence, as well as the vendor due diligence, and demonstrating that they actually have people, specifically in this situation, community banks, who are buying their products and services. So as I mentioned, the selection committee has grown. Our focus on problems remains the same. We take the posture, we're problem focused and solution driven. And the way we measure success in this program, Ken, is how many banks are truly engaging with the companies that are coming through this program. And we've got about an 85% hit rate. So, batting 850 is a pretty good place to live. And certainly more to tell you about our process, but let me stop there for a minute.
Well, I know we've heard from in our talks with Bob Fisher and also John Wachowski of the New York State Independent Community Bankers about the importance of applying technology for community banks so that they can provide the same level of service or better than the major national banks. And so it's an interesting program. You just finished your fourth cohort, I understand, for your ICBA ThinkTECH program, and you had a demo day last week and had the different fintechs participating in this year's program. A very interesting one got the MVP award, KlariVis, which does data analytics, puts all that data coming in off the internet into perspective, makes it into information. Tell us about some of the companies that were in your program this year.
We 3 years ago, after the first year of the program, Charles Potts joined us as Chief Innovation Officer. Many folks probably know Charles, who's been had a chance to get his fingerprints all over this program and has really made an impact. It has been delightful to work with. And it was interesting during the selection process this year. We typically work with 10 companies, and Charles was pretty gung-ho on getting us to 11 this year, specifically because the quality of companies that we had come through and apply made some of those decisions more difficult. And the selection committee obviously supported that effort. So for this year, we did have 11 companies. The one that was actually fairly immature, which we knew going in, but part of our job when we bring companies into this program is to help work with them and obviously help them and facilitate working with the banks. As I mentioned, about 250 bankers met with these 11 companies this year in 30-minute increments through our process. They come on for 30 minutes. It's about 5 or 6 minutes about problem solution, about 2 or 3 minutes on a demonstration, and then it's a collaborative effort. So this is a Shark Tank. This is an idea sort of where people on both sides of the equation have a chance to collaborate. But you talk about KlariVis, and Kim Snyder and her team, they won the MVP award because of a high level of participation and just really exploited every possible opportunity that they could in participating in the program, and generated a tremendous amount of business as a result of that process. But one of the things that we know about financial technology is much of it today, particularly when we look at the cores, et cetera, much of it remains on what is legacy technology. And while the cores are evolving to a less legacy-based platform and growing through API solutions and cloud-based solutions and so forth, and giving banks a great deal more agility to be able to change the type of technology they're using, the way cores are being developed and so forth, that information and that data remains in a number of different places. And being able to access that effectively as a banker typically requires the use of Excel spreadsheets, other types of technologies that they're using, et cetera. But getting all that disparate information together is something that KlariVis does. And obviously the name KlariVis, which is sort of clear view, if you will, enables them to do that. And it's also very easy to customize it for a banker's particular need. But Kim's team was just extraordinary and did a great job. One of the other companies that was a great participant was also the company Quilo, led by Don Schaefer. And Don's team did, again, an extraordinary job. And what they are, Quilo, the name comes from the idea of quick, instant loans. And Don is helping to really, unlock the power for the SME and also for the buyer and the person who may need a quick loan, the capacity to do that really from their phone in a matter of a very few minutes. So one of the nice things is when you think about somebody coming to your house, for example, who may want to put a roof on your house, and the guy gives you a big number and you're like, geez, I don't know how I'm going to afford to do that. We give that SME, we give that business the opportunity, working through Quilo, to be able to ascertain whether or not that person can apply quickly for a loan and be able to finance that. So the buyer or the person in need at that point, as well as obviously the purveyor, have the ability to make that connection very quickly without having to go back and complete paperwork and so forth. And they're doing this on behalf of the bank, so they can white label this for use at the bank, or Quilo can be embedded in the bank's web presence or with their technology. One of the other companies that I thought did a terrific job was a company called Vero. And while many banks today aren't that actively involved in the floor planning of particularly automotive or vehicles, Vero's been able to really open that up. And I know there were a couple of bankers who kind of stepped away from that because the captives, the big companies, obviously the Fords, the GMs, et cetera, tend to do a lot of that on their own. But there's also a large percentage of car dealerships that don't do that, who are buying from auction, that sort of thing, used lots and what have you. And some of these are very high quality institutions. And Vero has done an extraordinary job there of helping to unlock that and give bankers access to lending that money to create that non-interest income that's coming from those sort of circumstances. So Vero did a great job. That's another company I would speak to. Let me stop there for a minute.
Well, I know one of from our talks with the ICBA leaders is promoting and encouraging financial literacy at all levels is a key goal. I noticed a couple of companies in the cohort. Chimney does a financial calculation, and WealthStack financial wellness platform. And I go back to working at Dean Witter early in my career, a stock brokerage. And financial planning was always a big need that the brokers tried to encourage. It looks like you got a couple of companies that have some interesting ways to help bank customers with their financial futures. Maybe tell us a little bit about that overall need these companies address.
Yeah, really interesting topic, Ken, and one that I'm pretty personally passionate about. Over this last couple of years, and really since sort of the Black Lives Matter thing became a major concern and so forth, the topic of financial wellness and building wealth and the low to moderate income and perhaps those who are less privileged, where, let's face it, the playing field just isn't level. And helping these people, we know that if they have a capacity to build wealth, and can generate an asset, that the likelihood that they can lift themselves from poverty and improve the quality of their lives is truly that path. There's obviously been a lot of money thrown at this topic as it relates to trying to help folks who have these challenges. You know, we still have a country where about 70% of folks don't have more than $500 in the bank. Obviously, wages are increasing. Those opportunities are getting better. Cost of education. We tend to talk a lot about financial literacy, which I think is sort of interesting to me, because if you've ever had a chance to deal with folks who are challenged with money, they're actually usually very clever with money, particularly if you look at like Latinx community, people who have to send money abroad and so forth. They know how to work these systems, whether it's Western Union or a check cashing place, et cetera, because typically they're not banked or they're underbanked at best. The other thing too is they have a preference to usually try to work within a brick and mortar institution where they have the capacity to build trust with a particular individual. But you know, it's a big area, and you know, I quote Darren Williams, who is the CEO of Bancorp South, who said, you know, we have to make sure that this is a movement, not a moment. And I think he may have pulled that from Hamilton, but regardless, I think that's very much where we're at. I think there's a lot of large institutions who are investing, I shouldn't say throwing, a lot of money at this topic, but it's highly fragmented. There's no silver bullet to it. And we need to be thinking equally about those people who are in rural environments. We need to be thinking about the elderly, et cetera. So these companies that we look at, like Chimney and WealthStack has been trying to, and is trying to provide content to people and to banks that they can use to push out. So this is mostly video content as well as written content to their constituents or their customers, to give them guidance about how to manage through these topics and what path they should take, and things to be thinking about as they try to work on improving their financial situation, trying to help create wealth and really make their lives better and do a better job with their income. Chimney, on the other hand, is really about helping to provide, we suggest, a sort of next generation financial guidance. And they're doing that starting really with calculators. And if you've ever gone for a car loan or a mortgage, it's always fun to grab one of those calculators and begin to kind of play with, okay, what can I afford? What can I afford? What are the rates going to be like? What am I looking at for a payment and so forth? They're pretty insightful, but Chimney's really taken that to the next level and is really not only helping the prospect or the customer resolve those issues, but helping to identify for the bank what are the concerns or what are the areas that this particular customer is looking at. So if I'm going to a mortgage calculator, the chances are I'm probably interested in a mortgage. If I'm going to an auto calculator, chances are I may be interested. So collecting that data and again being able to put it to work, if you will, for the community bank in that fashion, and be able to embed those into their web presence or into their digital presence as a bank. So hopefully that kind of addresses those two for you.
Absolutely, and you'll be starting another cohort for next year, and I know you try to encourage as many fintechs as possible to apply. And just take us through again, what are some of the mentoring steps that you provide to fintechs while they're in the program?
You know, I always encourage people who want to talk to us about our program to talk to the people who have been through the program, whether it be a banker or it's a fintech. Because we have always leaned very heavy into go-to-market. You know, Watson said it, right? Kind of, nothing happens until you sell something. I say it a little different, which is, if nobody buys what you're selling, you really don't have a business. So we want to make sure that we give people access to the buyers of these products and services, and those are the community bankers in the ICBA program, and also bankers as a whole in the FIS program. And like I said, we do these 30-minute increments. Like so since we've been in the sort of post-pandemic world, we went from having a 16-week program on the ground here in Little Rock to now what is a 4-week incubation period, where we really work with these companies to teach them how to speak with banks. I mean, but also, and I'll tell you, I think it's just as important how to listen to banks. What are they telling you? What are you hearing? You know, my dad always said God gave us 2 ears and 1 mouth for a reason. I think there's probably some good advice in there. I probably should listen to it more myself. So that's a big part of what we do in the initial stages and get them prepared. And we have members of the selection committee who will come in and work with them during that initial kind of incubation phase. Then we move into the acceleration phase. And as I said, these companies each will speak with about 3 banks a day, 30-minute increments apiece. in the process that I told you, sort of problem, solution, demonstration of the product, and then a highly collaborative environment where, I think we've done a great job of creating trust with the bankers as well as with the fintech, so they have that opportunity. And what they'll do is they'll acquire feedback from the bank about that particular product or service and why they like it, why they don't like it, what their questions are about it. I can always think of Joe Earnhardt from a company called Tesla, who had built pretty much a desktop solution. And one of the bankers said, and it was really for being able to look after a lot of data, but mostly for loan and loan origination. And one of the bankers said, Joe, this is a great solution, but my bankers are out on the street calling on customers, talking to clients. Can you create this in a mobile fashion? Joe took that feedback, went back, created the mobile fashion, and of course that company exploded and did a great job because of that guidance that they got from community bankers. And, I can never say enough about the effort that bankers put into this. But one of the great benefits of the program, too, is also the way in which we help community banking, I think, build a culture of innovation. There's a large Arkansas bank, of course, we know it as Arvest. They do participate in this program. But when they do, we see this more and more, and this has sort of been a benefit of COVID. Before, when people would come to Little Rock and they'd bring the CEO would come and maybe the chief technology officer would come and visit with us, and often would say, I wish my chief marketing officer here was here to see this, or I wish my chief security officer was here to see this solution, et cetera. I don't know why, because we did it in these rooms. We never turned on the Zoom camera and said, let's get them to participate, but I guess we weren't thinking that way back then. But today, what we have learned through this program is now we can get a lot of people involved in the assessment of these companies and the participation in this collaborative environment on a departmental basis. As I mentioned, Arvest brings over 60 people onto the call, and that's a 7.5-hour day that's dedicated to Zoom. So, again, you got 10, 11 companies, 30 minutes a piece, you can do the math. Now, people don't participate in every single one of them. Departmentally, it may be security, it may be loan origination, it may be marketing, it may be data, whatever the case may be. But the point is that they use the program not only to evaluate companies that they may have an interest in, but also to teach people within their institution what's going on out there with companies that have been pre-vetted, that are relevant, helping them to be more competitive, and that are available for them to do business with tomorrow.
Hey, certainly, I think in March I was on 3 fintech conferences, and I guess mobile has been a big reason why fintechs have grown, the banks having to very quickly provide mobile service, and then the pandemic has accelerated customers' need to be able to bank remotely, either online or through mobile. And are these a couple of reasons why fintechs have grown? It's sort of a phenomenon in business today, I would say.
It's a great question. I think there's sort of 3 things going on right now, and these aren't my words, but I captured it from an article I read a couple of months ago. And we talk about the modernization of financial technology, obviously the digitization of financial technology, our capacity to work in a digital environment and be able to, think about buying a car or looking for a mortgage on our sofa, watching a Steelers game at 11 o'clock at night, right? We can do that today. And of course, the last piece is consolidation, which, we have a lot of companies today that are doing very similar things. And like we saw when the internet boomed back in 99, 2000, we'll see consolidation of these solutions, some to buoy up others, some to be additive, all these sorts of things that are happening. But, I do think the pandemic's had a very significant impact on this, but I do think that it's also what customers are demanding. So the banks are trying to be responsive to that demand. I do think that when you look at a bank's customer today, it's complex because you still have those that are sort of 70 plus who might want to write a check and still get mail from their mailbox. And then we've got the 21-year-old who's thinking about getting a student loan or perhaps buying a car for the first time or just purchasing something. And they're wanting to do that from their phone from wherever they are. The proliferation of phones has made that also a big issue, in the fact that we can transact directly from our phones. We talk about digital currency today. Well, haven't we really already digitized currency? I don't know how about you. I very seldom write a check, if at all anymore, maybe once or twice a year because I have to, because whoever I'm paying on the other end doesn't accept any other form of payment. It's great when you walk into a store today to buy something, you can wave your phone or even just wave a card in a contactless fashion. So I think all these things are contributing to a change in demand, but also a need for us to really answer your question is, I look at the word fintech today for banking as partnership, not threat. And I think the greatest threat that bankers face today, specifically in the community space, is inaction, not being willing to look at some of these solutions and give them consideration. And it's remarkable, you know, we have a bank in outside of Chicago, community bank that's led by one of the ICBA selection committee members, about a $250 million bank. And Greg Ollendorf and his team there, you know, they've engaged 8 or 10 of the companies that have come through this program over 4 years. So size doesn't really matter. It's really about finding solutions that enable you to capture what I like to suggest is the leakage that tends to occur from banks today. I look at my own bank account. I'm in this business, if you will, so I use my bank account a little bit as a laboratory, but you know, I have a digital loan because I want to see how that works. I've used a firm to buy a Peloton because I wanted to see what buy now, pay later look like, et cetera. You know, so I have a Robinhood account. I have an Acorns account for my grandson and so forth. But you know, one of the things you do see with the fintechs that are doing that work is their marketing capacity is really great, and oftentimes, I hate to say it, maybe even a little better than the banks are doing it, because that's their business. They're really marketing companies first. But you know, I do think that that today it is all about collaboration. And when I spoke at the ICBA and also at Demo Day, if you go back, that's kind of my focus is the banks that are embracing the potential partnership and the partnership with fintechs, I think are seeing better success. Look at Coastal, Eric Sprinks Bank, SunWest, et cetera. And we're also seeing an interest with the funds that we're involved with of bankers who now want to invest in these companies because they can have a material impact on their performance.
Hey, and we're talking with Wayne Miller, the executive director of the Venture Center in Little Rock, Arkansas. And you've got a conference coming up in August 15th to the 17th, a FinTech Summit. Tell us a little bit about what you're planning.
Well, thanks for letting me put a plug in here, Ken. For that, I appreciate it. Yeah, we had to delay it. We actually had it set up to occur last month, but our momentum was really undermined, if you will, by Omicron. So we decided to take a step back. You know, I mentioned earlier in the conversation about the history of Little Rock and fintech, and we'd like to really grow and build on that history. There's been some remarkable entrepreneurship and some amazing companies that have grown from this area, mostly along financial services. So obviously we have the Walmarts, the Tysons, and the J.B. Hunts, but we also have the Axioms. We also have the Euronets. We also have the FISs, et cetera, that have come from this neck of the woods. And, you know, we really have always, this is something we've always wanted to do here. And what we really decided to build was a summit that's structured very much like our accelerators are built. And you know, the bankers love coming here and love participating in this program, love what they learn, love their capacity to contribute and so forth. And what we really find is particularly in community banking, where bankers gain the biggest bang for the buck is when they have an opportunity to really be together and share the idea and help each other. So we really wanted to do 2 things here. One is bring pre-vetted solutions. We have now close to 100 alumni and others who want to participate in this program to come present, to also include with each of those categorically subject matter experts around that, again, whether it's security, whether it's lending, whether it's back office, whatever it might be, and to find those experts who fundamentally are in banker roles. Many of them are bankers, right? So when you talk about banking as a service, we're going to see a guy like an Eric Sprink who's going to talk about that, how he's doing that, how he's implementing it, et cetera, but also look at solutions that align with his objectives and how he's been able to be successful for other bankers to consider. So then we'll have an opportunity to our expo hall and so forth to obviously interact with these companies. But we'll try to show folks obviously a good time here in Arkansas. We've got some extraordinary keynote speakers that are going to be part of what we're doing here as well. We know it's a little bit of lift to try to do this in Arkansas. You know, this is not Orlando, it's not New York, it's not LA, it's not you know, Scottsdale, where we can all play a little golf and have some fun and learn about fintech. It is Little Rock, Arkansas, but you know, it's always a little tough to get here, but once you're here, it's super easy. It's for many people a 2 plane ride, so that makes it a little bit more challenging. But like I said, once you land here, we're 6 minutes from the airport, and all the things that we'll make available to people for this conference will be walking distance. We've got some great entertainment and some food and some extraordinary speakers that I think will be a part of this, and we're excited. We've got a couple hundred folks signed up already. We'd like to double that. Hope people will manage to do that. We've got lots more fintechs who are signing up. I have to admit that the support from sponsors from the fintechs has just been extraordinary. The bankers are really starting to jump on now. We're excited about that. And I think it's because of the quality of the messaging and the content that we're providing.
Well, it sounds like a great event, and we're hoping to be able to get out there and participate. That is August 15th to the 17th, the Venture Center FinTech Summit, and we'll have some information on that on the comment section here. And Wayne Miller, just maybe a final thought about the program for next year and how fintechs who may be interested can sign up to be a candidate.
Well, thanks. You know, we're very proud, Ken, of the number of banks that have a chance to participate in this program. We touched well over 250 this year, probably 1,000 bankers, which coming from our first year when we had 50 is a 5x ability to grow. We've pretty much reached capacity there, but one of the things that we're trying to do in working with the ICBA through the state associations is to make this program more prolific, because of course the ICBA in itself is about 4,600 or 4,700 members. So when you think about the fact that we've touched 1,000 bankers and 250 banks rather, we've really just scratched the surface. So we encourage bankers, regardless of the time of year, whether or not there's a program going on, to reach out to us, and we're happy to connect them with the companies that have participated in our program. And I can rest assured the companies are eager to have conversations and they have an opportunity to sell their products and solutions. So we're excited to do that. We are now we've about 2 weeks left before we conclude the application process for the FIS program. Again, now in its 7th year. So good fintechs who are bank enabling, who are in market, have a little bit of business, a good team, and want to have an opportunity to participate in these programs should apply directly. Go to our website at venturecenter.co.co, and we'll look at it. Many times it takes sometimes a year or more for people to get into this program because the demand is so high with only 10 slots. So jump on. We love to talk to companies regardless of their stage. Probably Daniel and his team, who operates the accelerator on my behalf here at the Venture Center, is probably talking to 1,000 to 1,500 fintechs a year from all over the globe. Wow. The other thing too is if you're a banker or you're a fintech and you know a great solution, let us know about it. Referrals are probably the key to us getting the best companies in the program. So we're excited about another year with FIS, looking forward to 2023, obviously with ICBA, and continuing to be a resource here for banking.
Wayne Miller, great to be able to chat with you today and hear about your recent cohort that went through your program, the ICBA ThinkTECH, and just the growing impact of fintechs on the banking community, and also hear about your event coming up in August out in Little Rock. That should be quite good. Thanks so much for talking with us today.
Ken, thank you, and thanks again for having me on and listening to, I think, the good work we're doing here, trying to have an impact. So we appreciate you helping to amplify that message very much.
Absolutely. We enjoy being able to do that. And again, this is Ken Kreitzer for CBSI. We're based in Harrison, New York. We provide insurance-based benefits to the credit card and payments industry, and we are celebrating our 50th anniversary this year. And so we'll have another episode of CBSI Talking Business very soon. Thank you for watching.